Welcome to the first step for the accounting process. It's called that source of documents. We have already studied about the accounting process. If you look at the accounting process, the first step is the source of document. So in this lecture, we will learn about the source of document. Under this lecture, we will learn about what's the source of documents and what are the type of accounting source of document and what are the buyer side source of document and what are the seller side source of document we are going to look at in this lecture. The first part is what's the source of documents. Accounting source of documents are form of documentary evidence providing detailed written proof of financial transaction. If you are working as accountant in the organization, if you record any financial transaction, you should have the documentary evidence, right? Without documentary evidence, we cannot enter the transaction into the financial record. So the source of document is base document or written proof documentary evidence. That's called that source of document. What are the types of accounting source of documents? There are many types of accounting source of documents. The main and most common accounting source of documents are as follow. If you are going to buy anything else, these source of documents you need to be create, right? So the first one is a purchase order. If you want to be purchase something else from the seller, you need to be send the purchase order. Then after that, the sellers send the goods to your company. If you receive the goods, you have to be send the documentary evidence, that is called that good received note, right? This is mentioned this much goods we received, alright? So after that, you need to be check your goods, and sometimes some of the goods are damaged. So at the time, you have to be send the debit note to the seller. It mentioned that this much goods are damaged, we are going to return to your company. Then fourth one is remittance advice. It's a mention about the payment details. After that, check. If you are going to be pay the money to the through the check, you can use the check. That is another source of document. The other one is paying in slip. If you want to be deposit the money to their bank account, we can use the paying in slip. The final one is a payment voucher. If you are going to be pay money, we need to be use the payment voucher. So this is the buyer side source of document. In the opposition process, it's a seller side source of document. If we are seller, send the quotation to the potential customer, then we will get that sales order from the customer. So the first source of document is sales order. After that, we send the good and service. When we send the good and service, we need to send the delivery note. It means that we sent you this much quantity of goods to your company. That is one of the source of document, that is the delivery note. After that, we have to be send the invoice. The invoice mentioned that how much the quantity and how much the price and the total amount it should be mentioned. That is the invoice. And after that, if the buyers return some of the goods, at the time we have to be sent to the credit note. It should mention that this much goods you return and be credit in your account. So that is called that credit note. After that, statement mean we have to be get the money from the buyers. So in this statement, we mentioned that this much invoice pending, so you have to be pay in the immediate manner or something like that. So this is called that it statement. After that, we need to be receive the money from the buyers. So at the time, we need to be use the receipt. So these are the common source of document. Now we are going to look at that the diagram for the buyer side source of document. So the first one is purchase order. You can see that the first one is purchase order. After that we will receive the goods. At the time we have to be send the good receive note. Then if we return some of the good, we have to be use the debit note. After that we will send the remittance advice for the payment. After that check. If you are going to be paid through the check, you can use the check. And then paying slip. Paying in slip mean if you are going to be paid through the bank deposit, you can use the paying in slip. And the payment voucher is if you are use any kind of payment, you need to be use the payment voucher. So this is the buyer side source of document. Now we are going to look at that one by one, the source of document. The first one is purchase order. Purchase order are issued by a buyer to a seller setting out the details of the goods or service the buyers is ordering from the seller. It means that if we send the purchase order, we need to be mentioned that what are the item and how much the price, unit price and the total amount. In this purchase order you can see that they mention the quotation, the quotations details. In the quotation, in this quotation mention the unit and quantity and price. So this is the simple local purchase order source of document. This is the first source of document for the buyer side. The second source of document for the buyer side is good receive note. Good receive note mean if we receive the goods from the seller, at the time we have to be create the source of document that is good receive note. We have to be sent to the seller. Alright? Okay. So the next one is debit note. We have already received the good, but some of the items are damaged. So if some of the item damaged, we have to be returned. At the time we can use the debit note, that is the another source of document. You can see that debit note is prepared by the buyer to show that goods have been returned to the seller. This is a simple debit note. The next one is a remittance advice. Remittance advice means this advice sent from the buyers to sellers, which are the invoice we are going to be paid. Alright, it's mentioned in the remittance invoice. You can see here remittance advice is sent by the buyer to seller together with the payment in respect of good purchase and account from the seller. The purpose of the remittance advice is to show the seller which their invoice is being paid and how the payment should be allocated in their accounting records. This is the symbol remittance advice. The next one is check. Check is the return order to the bank authorizing the bank to pay an amount of money to the person named on the check. After receiving the goods, we have to be pay the money. So one of the way is a check. We can give the check in the name of the company or name of the person. So this is the one of the source of document. Other one is paying in slip. Paying in slip is another way of settle the amount to our seller. So this is the deposit money into the bank account. The particular seller, we need to be pay the seller. So we are going to deposit the money into their bank account. So at the time we are going to use the paying in slip. Paying in slip is used to deposit money into a bank account. The paying in slip show the details of the coins, note, and check deposit with the bank. The account details and the date also appear in the paying in slip. So you can see here. The next one is payment voucher. Payment voucher, it's normally used that for the payment, authorizing document for the payment. You can see the sample payment voucher, right? And then payment voucher mean authorizing document for a payment. The voucher can be for any form of payment such as petty case, expenses, wages and salary payment on the vendor account in the account payable ledger, right? So the payment voucher mean authorizing document for a payment. Now we are going to look at the seller side source of document. If you look at this diagram, you can easily to understand what are the seller side source of document. If you imagine that if I am a seller, so first I need to be create the sales order, because we have sent the quotation to the potential customer, then we receive the order from the customer. So at the time we have to be send the sales order to them, right? Sales order to them. So after that we have to be send the goods. So if we send the goods, we have to be send to them delivery note. After that we have to be create the invoice. In this invoice we need to be mentioned this much and this quantity goods are be sent to them. So the total amount for these goods amount we have to be mentioned in this invoice. So this is the third source of document. The next one is credit note. If the customer return the goods, at the time we have to be send to them credit note. In this credit note mention that this much you return, so we credit to your account. So this is the document is called that credit note. Then after that we have to be send the statement. In this statement we mention that the invoice and then credit note amount and then finally how much amount the customer need to pay us in this statement mentioned. So the statement is another source of document. After that we need to be receive the money. At the time we will use the receipt. So this is the seller side source of document in the diagram. So now we are going to look at that. The first source of document, it is the sales order. So the sales order symbol, you can see here the sales order symbol. The sales order issued by a seller in response to the purchase order received from a buyer. The sales order will typically show the details of good being ordered, date, quantities, agreed price, and also refer to the purchase order from the buyer. So the sales order sent or issued by a sellers to buyers, right? So the next one is the next source of document is delivery note. The delivery note sometimes refers to as good dispatch notes, are accounting source of document prepared by the sellers to show that goods have been delivered to the buyers. So the delivery note, it is one of the source of document. It is sent from the sellers to buyers. The sample delivery note you can see in the slide. The delivery note will normally show the particular of the goods delivered, the parties to the transaction, the date and quantity of product delivered, right? So the next one is invoice. When a seller sells good an account to a buyer, it issues an invoice. The invoice will typically show the particular of the goods or service sold, including the parties to the transaction, term of the payment, the date, quantity and price. You can see the sample invoice here, and this invoice sent from the sellers to buyers. It is mentioned that the goods or service sold and this much quantity, this much price and everything it will be mentioned. The next source of document is credit note. Credit note, as I told you, that if the buyers return some amount of goods at the time, the seller need to be create the credit note and send to the buyers. A credit note does the opposite of the invoice. If the sellers sell goods to a buyer on an account and the buyer returns some of the goods to the seller, then the seller will issue a credit note. So the symbol credit note you can see in the slide. The next one is statement. The statement issued by a seller to a buyer, the statement which is issued for an accounting period, usually 1 month, will show details all the invoice and credit note issued by the seller together with the details of the payment received from the buyers. You can see here the sample of the statement. They mention that the value of the invoice and then amount received and balance need to be received. This is the balance need to be received. So this is the sample statement, right? So the sample statement, or the statement issued by the sellers to buyers, how much the due amount need to be settled from the buyers, right? So that is the statement. The next one is a receipt. Receipt are accounting source of document normally issued to acknowledge that the money has been received by one party from another. The receipt will typically show the particular of the money received, including the parties to the transaction, the date and amount of money. It means that we sell the items to the buyers and after that we have to be receive the money. So at that time we have to be send the receipt to the buyers. In this receipt we need to mention how much we receive and the date and the transaction for the invoice, bill, everything you need to be mentioned in the receipt.